While most people were still asleep, silver quietly sent a message to the market. At 5:30 in the morning New York time, the price was sitting at 91.33 an ounce. Not after a dramatic breakout candle, not after a headline frenzy, but after a calm, almost deceptive pause. And that's exactly what makes this moment dangerous. When silver is screaming, everyone hears it. When silver goes quiet at historic levels, that's when the real decisions are being made behind closed doors. A few cents down on the screen doesn't mean weakness, it means pressure. Pressure building under the surface. Because markets don't stall at these levels by accident. They stall when buyers and sellers are locked in a silent standoff, when liquidity tightens, when positioning matters more than headlines. This is the zone where emotional money gets shaken out and patient money steps in. If you're only watching the price ticker, you're missing the story. If you're reacting to every small red candle, you're already behind. Today isn't about panic, and it's not about celebration either. It's about understanding what $91 silver actually represents in the bigger picture. We didn't get here because of one trade, one rumor, or one news event. We got here because of years of inflation pressure, industrial demand, currency debasement, and a slow erosion of confidence in paper assets. Small pullbacks at major highs are not a signal to run, they're a test of conviction, a test of patience, and a test of whether you understand the difference between short-term noise and long-term structure. In this video, we're not here to hype or scare you. We're here to slow things down and bring clarity. We are going to look at why a flat or slightly negative move at $91 can be more important than a $5 spike at $70, what smart money watches during moments like this, and why silver's behavior right now could define the next phase of this market. Because when prices are high, mistakes are expensive, and understanding is everything. The silver market opened this morning with a surge of activity, and investors around the world were glued to their screens. As of January 15th, 2026, the price of silver in the USA stands at approximately $91.33 per ounce, showing a slight dip of 0.07, but the momentum is undeniable. Traders are watching closely because the market has been highly volatile over the past few weeks, driven by a mix of industrial demand, investment flows, and geopolitical events. The physical demand for silver continues to rise, while major banks and financial institutions are also positioning themselves strategically. For investors, understanding the difference between paper silver and physical silver has never been more crucial. While some see these fluctuations as an opportunity for quick profits, others recognize that the long-term trajectory of silver is being shaped by factors far beyond everyday market noise. The charts, ratios, and price movements all tell a story of a market at a critical juncture, and those who move with knowledge rather than emotion are likely to navigate it successfully. Today's prices, although slightly down from yesterday's peak, reflect a broader trend of increasing value and growing recognition of silver as a safe haven asset. Whether you are a short-term trader or a long-term investor, knowing why silver behaves the way it does, and how external forces like industrial demand, US dollar fluctuations, and geopolitical uncertainty influence it, is the key to making informed decisions in this dynamic market. As the trading day progressed, silver continued to capture attention across global markets. Analysts noted that while the price per ounce sits around $91.33, the underlying factors driving this market are far more important than minor daily fluctuations. Industrial demand for silver, especially in electronics, solar panels, and battery technologies, remains strong, pushing institutional investors to secure physical holdings. Meanwhile, geopolitical tensions and concerns about currency stability are fueling safe haven buying, with both gold and silver benefiting. Short-term traders are reacting to market rumors, news headlines, and technical chart patterns, but the smart money focuses on fundamentals, recognizing that these metals hold intrinsic value beyond momentary spikes. The US dollar's strength or weakness plays a critical role as well, affecting buying power and influencing cross-border flows. Investors are reminded that silver is not just a speculative asset. It's a tangible store of wealth, historically proven to preserve value during times of inflation or economic uncertainty. Understanding the interplay between industrial demand, investment interest, and macroeconomic pressures allows traders and investors to navigate volatility rather than be swept away by it. In this evolving landscape, knowing when to buy, hold, or wait for a correction can make all the difference, ensuring that market moves are strategic, informed, and aligned with long-term financial goals. By midday, silver's momentum began to show signs of consolidation. Prices hovered near $91 per ounce, but beneath the surface, market dynamics were shifting. Large institutional players were quietly adjusting positions, taking advantage of minor price swings to optimize their holdings. Retail investors, on the other hand, often reacted to headlines or social media chatter, creating short-term volatility that the bigger players could anticipate and exploit. Technical charts displayed key resistance and support levels, signaling that a pullback or breakout could happen at any moment. Global events, from currency fluctuations to geopolitical tensions, continued to feed demand for safe haven assets like silver. Analysts emphasize that while these factors might appear alarming on the surface, experienced investors view them as opportunities to enter strategically rather than chase the hype. Industrial demand remained robust, with silver increasingly essential in electronics, renewable energy, and medical applications, adding a layer of long-term support to the market. The interplay between physical supply, ETF movements, and futures trading created a complex picture, but those who understood the fundamentals could navigate it effectively. In this environment, timing and discipline were critical, as impulsive decisions often led to losses, while calculated, informed moves allowed investors to position themselves for both immediate gains and sustained growth. Understanding these dynamics, beyond the daily price ticker, was key to turning market noise into actionable insight. As the afternoon trading session progressed, silver experienced heightened activity, with prices fluctuating around the $91 mark, but showing increased volatility. Market watchers noted that this movement was largely driven by a mix of short-term traders reacting to breaking headlines and algorithmic trading systems amplifying minor price changes. Meanwhile, institutional investors remained calm, using the volatility to adjust positions and hedge risk, often buying dips or selling small increments to optimize profit without triggering panic in the market. Physical demand continued to underpin silver's value, with industrial usage in electronics, solar panels, and medical technology sustaining baseline support, while investor appetite for safe haven assets added upward pressure. Analysts highlighted that the recent price spike wasn't just speculation. It reflected broader macroeconomic trends, rising inflation expectations, weakening currencies in certain regions, and geopolitical uncertainties increasing demand for tangible assets. Technical indicators, such as moving averages and volume patterns, suggested that silver could consolidate before attempting another breakout, meaning investors needed patience and a disciplined approach. Those who focused solely on daily price changes risked making reactive moves, while informed participants leveraged the situation to enter positions strategically, understanding that short-term fluctuations were part of the market's natural rhythm. By studying both the physical supply-demand picture and the interplay of futures and ETF flows, investors could make educated decisions, positioning themselves for potential gains while managing risk effectively in this fast-moving environment. As the trading day approached its close, silver continued to display significant volatility, swinging between highs of $91.50 and lows near $90.50. Analysts noted that the market was being influenced not just by short-term speculation, but also by larger structural forces, including ETF rebalancing, industrial demand, and the ongoing global appetite for safe haven assets. Investors who had entered positions earlier in the day were carefully monitoring the price action, deciding whether to take profits or hold for a longer-term strategy, mindful of the metal's historical performance over months and years. The underlying strength in silver's industrial usage, particularly in electronics, solar technology, and medical equipment, provided consistent support, preventing any drastic downward collapse despite temporary paper market fluctuations. Simultaneously, algorithmic trading and high-frequency trades were amplifying smaller moves, making it appear as if volatility was even greater than in reality. Technical analysts highlighted key levels of support around $90.80 and resistance near $91.60, suggesting that the market might consolidate overnight before the next major move. Market commentators emphasized the importance of viewing today's price swings in context. While intraday changes could trigger emotional reactions, the broader trend remained bullish for those using a disciplined approach. By understanding the interplay of global supply, investor sentiment, and macroeconomic trends, market participants could navigate the volatility intelligently, positioning themselves to benefit from silver. Continued upward trajectory while managing risk carefully in this dynamic environment. As the trading day wraps up, the key takeaway is that silver remains a dynamic, high-stakes market where both opportunities and risks coexist. Today's swings highlight the importance of staying informed, analyzing both short-term movements and long-term trends, and making disciplined investment decisions rather than reacting emotionally. Whether you're a trader seeking tactical entry points or an investor focused on long-term wealth preservation, understanding the forces driving silver, from industrial demand and ETF activity to global economic uncertainty, will be essential for success. Remember, volatility is not the enemy. It's a tool for those who know how to use it wisely. Stay alert, plan strategically, and position yourself to benefit from silver's continued strength while safeguarding your portfolio against unnecessary risk. The market will continue to move, but with knowledge, patience, and the right strategy, you can navigate it confidently and turn today's fluctuations into tomorrow's opportunities.
Hello friend, welcome to my YouTube channel. I hope all if you are doing great and having an amazing day. My name is Noor Baqi and I am really excited to start this new journey with all if you. This channel is not just about videos, it is about story and ideas and inspiration. I created this channel to sharing something positive every signal week. Sometimes we all need little motivation, and sometimes we just need a good story to smile again. Decide exactly what this channel is all about. You find understanding stories, real life experience, and powerful lessons that again change the way you think. I be uploading new videos regularly. So if you don't want to miss any of them, make sure to subscribe to my YouTube channel and press this bell icon so you get notification when you post something new. You support means everything to me, and to great we can build a community full of fraternity, learning, and good vibes. So sit back, relax, and let us begin this amazing journey together. Thank you so much for watching, and welcome once again.